the first thought was, in Silicon Valley, we love immigration. In Silicon Valley, we have so many great companies, from Intel to Google, founded by people from other countries, that we depend on people with H-1B visas to program for these companies. But your take is that it's not going to be the most important thing. Why do you think immigration is not going to be the most important thing for Silicon Valley?
Yeah, we actually think trade, is a bigger deal for that. But when you think about immigration, what does Trump really want to do? When you hear his talk at the rallies, and ever since he's been elected, is that it's about creating jobs here. And when you think about what the technology industry is doing, they're not actually as much disenfranchising American workers as they are hiring the best of the best. When you look at the global talent force. And at the same time, when you think about the supply, just simple supply and demand, there's a lot more demand for these technology jobs than there is supply. So that's why we just don't see H-1B visas being as top priority as some of the other uncertainties.
David?
Well, my thought when I hear that, because I assume what you're saying, James, is that if he takes his trade actions, Apple iPhones are going to have tariffs put on them or whatever. That's my opinion is that is simply not going to happen, because if he were to take many or even most of the trade actions that he's promised, the global economy, and particularly the U.S. economy, would go into a very discernible tailspin.
Like getting rid of NAFTA.
Just to name one. There's so many things. I mean, this is a very delicate balance. The value of the dollar, who holds our debt, our trade balance in both directions, whether we buy imports or not. If he really messes with that in any direction too much, you risk creating a disequilibrium that really could be very damaging to the economy, damaging to the people who elected him. And I'm sure that he's going to have some relatively smart people whispering in his ear and reminding him of that.
Yeah. A note that was nowhere near as good as yours this morning, but Tony Sacconaghi at Bernstein, and if Tony was sitting here, I would be talking about how lousy your note was. But Tony Sacconaghi at Bernstein had a really interesting note today where he really focused on taxes and repatriation. And I thought one of his really interesting takes was on a dollar-weighted basis, if you look at the S&P 500 in taxes, that non-tech companies pay a lot more in taxes. Now, to some of us, that's just kind of a duh, because a lot of even S&P 500 companies in technology don't have profits. So, of course, companies like Salesforce will pay less in taxes. But the tax rate paid by non-tech companies, I think we've got a graphic that even shows it, that on a dollar-weighted basis, again, 17.9% is the average tax rate of tech companies in the S&P 500, whereas it's 24.6% of the rest of the companies in there, which suggests that a tax cut won't actually help tech companies. So maybe this sell-off makes some sense. Maybe the rebalancing of an S&P 500 portfolio would have a little bit less tech because it would have less success in a new in a tax-cutting administration.
Yeah, but at the same time, you got to bring the cash back. I mean, we have trillions of dollars sitting overseas, right?
Right.
And if we can do it in a way that's not just done on a single basis, but rather on a perpetual basis, where we know that it's not a one-time stimulus, but a prolonged one. So I do think that there is opportunities, for these companies, because I talk to these companies, right? They tell me that if they had the opportunity to bring it back, they would. Several years ago, eBay tried to bring their $3 billion back, but they couldn't, because everybody was up in arms. Why would you want to pay 40 cents, 50 cents on the dollar to bring this money back? But they have an opportunity.
But that's great.
You know what I mean?
That's great for these companies, though. Yeah. Why should their stocks be dropping if that might happen? I mean, come on.
Well, but the point to that point,
and it's great for the American economy.
So which is to say, Wall Street could be stupid here. I mean, if you look at Apple,
that never happens.
Shocker. The company that has the highest tax rate and the most amount of money overseas is Apple. Right. The very company that could benefit the most from this kind of tax rate.
I think that there is an overreaction right now, because there's a lot of uncertainties going on, but at the same time, there's not going to be something to completely destroy everything that's been established. Trade, yes, the focus is to bring back jobs, all the outsourced manufacturing and whatnot, but if it's done with the proper incentives, tax incentives to actually encourage that behavior, it probably will be a lot more muted than people expect.
Yeah, we're in a time of bizarre uncertainty, but that's one thing that's almost certain is the repatriation of those profits, because both sides really said they were going to do that, right? But if you don't like uncertainty, it is a pretty dicey time. There's no question. But my own view, I am just not feeling apocalyptic. I feel like I read this great article today by Zachary Karabel, who you probably know, really smart guy, saying, this is the same mood that the country fell into after the election of Nixon, after the election of Reagan. And I remember I was going to leave the country when Reagan was elected. It was that bad. That's the way we felt. And these things settle in and the republic survives. And probably the tech industry too.